Uganda Revenue Authority, developing Uganda together.
Wait, Abu, tunamaliriza. And what are you doing throwing papers all over the place?
I'm looking for an invoice for a sound system and cables that I received yesterday, but I can't find it.
You know there is a way of keeping all this in one place and available to you as and when you need it.
I really wish there was one, because the way these invoices grow legs and disappear.
I believe this is what you're looking for.
Now how did it get there?
Tabo, do you know that we've...
Good afternoon to you, dear taxpayers. My name is Anan Priska and I'm going to be your host for today's onboarding webinar. In studio today, we are joined by Irene Dagire. She's going to take us through what do you need to know, what do you do after you've got your TIN. Irene, welcome to today's episode, our very first episode for the year. Welcome to today's episode, and please introduce yourself. So a few opening remarks to our taxpayers.
Thank you very much, Priska. My name is Ndagire Irene. I come from the Taxpayer Literacy Unit under Domestic Taxes. I'm happy to be here. Thank you very much for joining our discussion.
Thank you so much, Irene. So today we're going to talk about what do you do next after getting your TIN. After you get your TIN, some taxpayers may wonder, what do I do? What are some of my rights? What are my obligations? And you have so many questions. But today we're going to disband them all. We're going to demystify what you should do. And Irene, I'm going to start off by asking, after taxpayer has got the TIN, what are some of their rights? What do they need to know?
Thank you very much, Priska. After getting a TIN, every taxpayer has a right of notification in case of an audit. In case we are going to audit your business, we cannot just get up and say, we've come to audit you. We are supposed to first inform you in advance about what we are going to audit so that you prepare yourself very well. For example, if I'm coming to audit sales, I will let you know so that you prepare your sales documents very well for me to come and look at them. That is one of the rights of a taxpayer. The other one is every taxpayer is presumed honest until when proved otherwise. That is why we say that we are living in a self-assessment regime. So we expect every taxpayer to tell us how they are operating, how they've earned, how they've spent, and we assume that every information you give us is the right information until when we get any other information that proves that you're indeed saying the wrong thing, and then we shall come in and do some checks. Then the other one is every taxpayer has a right to be treated professionally with courtesy.
Yes.
When I come to your business or when you come to office to see me, I'm supposed to treat you with respect. If an office of ours treats you badly, you're supposed to report them because it is your right to be treated professionally. That is another right of every taxpayer. The other one, every taxpayer has a right to privacy and confidentiality. When you give us your information, you can be very sure that we are going to keep it privately. Yes. I'm not allowed to give out your information to anyone, even if that person is your brother, as long as you've not accepted that we should do it. So that is the privacy and confidentiality. Then the other one is every taxpayer has a right to come and defend themselves on their own. I'll give an example of court issues. When you have a court case, you're supposed to get a lawyer to talk on your behalf. But with us, every taxpayer has a right of coming out on their own to talk about their tax issues. You're not supposed to get a representative if you don't want to. It is your right as a taxpayer to come individual and say, I'm Irene Ndagire, this is what has brought me here. You don't have to look for a lawyer to speak on your behalf if you know very well what you're talking about. That is the right of self-representation. The other one is you have a right to appeal in case of a disagreement. Or if let me take an example. If an office has given you an assessment of, for example, 50 millions, and you feel like it is a very high assessment, it is your right to come out and say, this amount is too much, this is what I'm supposed to pay, because it is in your right. You're not supposed to pay for it. Some people think that if they've given me an assessment of 50 millions, I'm supposed to first pay for it to be changed. No, it is your right to appeal in case of any disagreement. We have so many other rights, but because of the time, we shall end at that.
Okay. Thank you, Irene. That's very elaborate. But then we also know that on top of the rights, a taxpayer has some obligations that they have to meet.
Yes.
It's a win-win. Like everyone, you have a role and like you have a right, but you also have a role to play.
Yes.
So what are some of those roles, those obligations that a taxpayer ought to do?
Thank you very much. The moment a person gets a TIN, on the day the TIN is approved, the obligations start. What are some of these obligations? The first one is timely filing of returns. You're supposed to file returns on time. In our next engagement, we shall talk about the timelines for filing these returns so that none of our new taxpayers is caught off guard. When we talk about filing returns, we are asking you to tell us how your business has performed, and we shall elaborate more about that and the time when you're supposed to file that return. The other one is that return that you file is supposed to be correct.
Okay.
So we expect correct declaration of transactions in your return. That is another obligation. Then the other one is keeping of records. Is a very key obligation of taxpayers. We have an engagement more where we are going to elaborate more about keeping of records. Because if you've not kept records, there is no way you will know how you have transacted throughout the year.
Yes.
Because some of these taxes are annual. You started from July 1st and the year is ending on 30th June. If you've not been keeping records, how are you going to know how you've been transacting throughout the financial year? That is why we tell people to keep records in their businesses. Then the other one is timely payment of taxes. In the returns that you file, after declaring your transactions, your return will show you whether you have made a profit or not. And when you say profit, it means you will see a tax that you're supposed to pay.
Yes.
So after declaring the amount of tax you're supposed to pay, the next thing you're supposed to do is to pay that tax that you have declared. If you've declared rental income, then the next thing we should expect is rental income tax. If you have any employees in your business and you've filed a return for them showing us that you've deducted money from their salaries, then we expect that money to be paid within the specified timeline. And we've said we are going to elaborate more about the timelines in our next episode.
Okay, but just a quick one. The deadline for, let's say, payment and filing of the returns, is it the same or the different?
Yes, the deadlines are the same. If we are talking about income tax and we are saying the deadline for filing it is 31st December, then it is the same deadline for paying that tax. Then the other obligation that you have as a taxpayer is never to engage in any corruption. If an officer of ours, for example, has given you an assessment, and you feel like that assessment is a lot. For example, they've given you 3 millions, and according to you, you're supposed to pay only 500,000. You're not allowed to give them any money and say, please reduce this amount for me, I'm giving you this amount of money. Instead of giving them that money, add it on the amount of money that you're willing to pay so that you pay it as taxes and reduce your liability. So that is also the obligation.
Part of the obligations.
Yes.
Okay, dear taxpayers, I'm sure you're listening in, and Irene has made it very clear on the rights and the obligations. It's your right to report any of our staff who may be unprofessional, and it's also your obligation to make sure you do not try to bribe or do anything that may compromise the integrity of your own integrity, but also the integrity of the staff. So the next question I'd like to put to you, Irene, is what are some of the taxes that a taxpayer is supposed to meet during their course?
Thank you very much. As URA, before I talk about the taxes, there are also some other fees that we collect as URA, and so many people end up thinking that by paying them, they've already paid the taxes. Our mandate is to collect all government revenues. Some of those revenues are taxes, others are non-tax revenues. For example, we collect non-tax revenues like the license fees that you pay to Kampala Capital City Authority. We also collect money that you pay for in case you want a driving permit, or the one that we call it a driving license. Those are some of the non-tax revenues that we collect. Also, if you're paying money for a police penalty, that payment will be registered on the URA website. And many people have been confusing it, thinking that when they pay such monies, they are paying taxes. But that mandate of ours is to collect all government revenues and account for them. When you pay such money, you've not paid taxes. Another example that we collect is the school fees for the university students. If you're paying for your child out Makerere, you register the payment on the URA website. Those are some of the non-tax revenues that we collect. So after talking about them, let me also elaborate about the types of taxes that we collect. In Uganda, everyone who is earning an income is supposed to pay taxes as long as that income that you're earning has reached a given threshold, depending on the type of taxes that you're going to pay. When a person registers for TIN, we have a default tax type that goes on their TIN the moment they register, and that is called income tax. That is why when you come to apply for TIN, we ask you for your source of income. When you tell us the source of income, then we ask for how much money you're getting from that source. Because not everyone is supposed to pay taxes. You should only pay when you've reached a given threshold, depending on the money that you're earning. For example, if the money that you're getting is from employment, we ask you, how much are you getting from your employer? If you're getting only 200,000, we do not register you for 18. It means you've not yet reached the person who is supposed to pay taxes. The threshold there is 235,000. So I will start with the simplest one, which is pay as you earn. That is a form of income tax. That pay as you earn is deducted from employees. So when you're an employer and you have employees, we tell you that you're supposed to come and register for pay as you earn when your employees reach the amount of greater than 235,000. So we tell you that even if you have 2 employees or 1 employee, as long as that person has reached that threshold of 235,000, then you're supposed to come and register for pay as you earn. That is payee. If you have like 100 employees, for example, these people in construction, sometimes they have these casual workers that are so many. As long as none of them reaches our threshold, you're not supposed to register for pay as you earn. So people always ask, if I'm only 1 employee in my company, am I supposed to pay as you earn? Hope I've answered that. As long as you have reached the threshold, you're supposed to pay as you earn. And it is not the employer that pays it. It is the employee. Imagine as you're the one who is bringing it to URA, you're deducting it from the salary of your employee. So you're not the one who has paid. You're just helping us to withhold that money from your employee and then bringing it to URA. When you reach that time of deducting money, we tell you to register for pay as you earn, you the employer. And then you're supposed to be filing the timely returns for pay as you earn that I talked about. It means you're going to be filing returns every month, showing us the employees that you have on your company, and then the taxes that you deduct from them. And every time you do that, you're also supposed to pay us the tax that comes from it. Yes. Sometimes we get a question about employers who deduct money but they don't bring it to URA. We tell employees that if you have such an employer, please come and inform us. The moment we carry out our research and confirm that indeed this person has been deducting money from you, We shall give them an assessment, and of course you shall be rewarded. We reward people who give us such information.
Okay.
The other tax type that I'm going to talk about again under income tax is business income tax. All of the people who are in business are supposed to pay us some taxes as long as the money they get from the business goes beyond 10 millions in the whole year.
Okay. That's
For employment, it
individuals
is
or
per month, but for business people, it is per year.
per year?
Theirs is annual. Once the money that you make in the whole year as sales has gone beyond 10 millions, you're supposed to come and register for taxes. That is for business. But among those in business, we have the companies and then the individuals. Their income tax is treated differently. Both of them are earning from the business, but we treat them differently. If the money that you get from your business is between 10 millions and 150 millions, you're looked at as a small business taxpayer.
Okay.
For small business taxpayers, if you're unable to do our returns of income statement and balance sheet, you're given a right of filing what we call a presumptive tax return. That is the simple return for people who are in business and they are still having their small businesses. The presumptive tax return is done by just registering a payment. They just go to our website, register a payment. They call it payment income tax small business. And then after submitting it, two forms come out. One of them is the return and the other one is the payment slip. So they keep the return form in their business. They could be having a file where they keep their documents, and then they will take the payment slip to the bank to pay. By doing that, they've registered their transactions, because in that return we shall ask you for the amount of sales.
Okay.
By giving us the amount of sales, you've declared how much you earned throughout the year, and then it will show you the taxes that you're supposed to pay.
Okay.
Then,
so Erin, so if someone is below 10 million, their sales are below 10 million, then they're not supposed to, they don't pay any tax, and they're not supposed to even, let's say, fill out that form you mentioned. Or
thank you very much. If your business is below 10 millions, you're not even supposed to register for taxes, because you've not yet reached the amount of sales that brings you into the payment gap.
Okay.
Or among the list of people who are supposed to pay taxes. We assume that the 10 millions or less is just enough for you to maybe pay rent, pay your school fees for the children, pay salaries for your employees, pay for the trading license. Yes, to just take you throughout the year. So we don't expect to get any taxes from it. But if you're already on our register, for example, you could make sales of like 20 millions this year, and then next year you make a sales of less than 10. It does not mean that you should come and get off the register. Then you just register your payment. Again, you go to our website, register a payment, and then it will show, once you fill in and say my sales are, for example, 8 millions, that it will show you that your tax is 0. Meaning you're not going to pay us any taxes, but you have made your declaration. That is why we said make returns. By doing that, you have made your return for that year, and we have told you that I only made 8 millions.
Okay.
Yes.
But just always let your know where you're at.
Yes.
Okay.
So that is under business income tax for small businesses. Those are the ones between 10 millions and 150 millions. But if you're not a small business, before I leave the small businesses, we have professionals. If you're a professional, even if you're making between 10 and 150 millions, you're not supposed to file the presumptive return. For you, you're supposed to file the normal returns showing the balance sheet and the income statement.
Okay. A taxpayer would ask why.
Why?
Yes.
Because we assume that a professional is able to learn how to fill the returns. If you don't know how to fill it, we always advise you to come to us. That is why we have a taxpayer literacy unit. You come to us and we take you through how to file it.
Okay.
So a professional can easily adapt to filling that return,
Yes,
compared
that's true.
to the informal business people. Then, if you're beyond 150 millions, we expect you to fill the normal returns showing your income and expenses. If you're an individual taxpayer, the rate at which you'll be charged tax will move from 10% onwards. It will keep on increasing depending on the profit that you have made.
Okay.
So for the ones that show income and expenditure, you only pay taxes when the profit that you've made is beyond 2.8 millions in a year. And you only pay taxes when you've made a profit.
So when you make losses,
When you make losses, you don't pay any taxes, and the loss will even be carried forward to the new year.
okay.
For example, if you make a loss of 1 million this year, and you make a profit of 3 millions next year, we shall first reduce that profit of the new year we shall
The
first,
loss
yes,
from the old year?
Yes, we shall first deduct the 1 million that you made last year as a loss from the 3 millions, and then you only be charged tax on
the
the
2
2 millions.
Okay.
So that is the benefit of showing us your income and expenditure. Once your business goes beyond 150 millions, it is not optional. You're supposed to show us your income and expenditure.
Okay.
Then, among the business people, we also have the companies. Those are the artificial persons. When you register a company, we look at it as a person.
Okay.
It means that company can do transactions on its own. That company can go to a bank and borrow money in its own name. That company can register a car in its own name.
Independent of the individual.
Yes. So that company is separate from the directors. So once you have a company, the tax it pays is called corporation income tax. And their rate is 30% on profit.
Okay.
So when your company has not made any profit, it does not pay any taxes. Have you understood?
Yes.
So all of that is business income tax, whether you're a company or an individual.
Okay.
I've said for companies, the tax is at 30%
30%.
on profit. That is why we tell you to declare your transactions, so that when you've not made a profit, you don't pay taxes. And it is the fair thing.
It is. It's very fair.
That is how fair URA is. When you've not made any profits, no taxes.
No taxes. Yes.
When you make profit, we only take 30% on the profit, and then we leave the 70 for you to maybe pay the shareholders or put back into
The
your
business.
business.
Okay.
That is all about the income tax.
tax.
We shall talk about filing of those returns, which show the income tax you're supposed to pay in our next episode. The other tax that we have is rental income tax. Now, this one is different from those in business. For it, it is for people who have rentals. If you have houses where people come and rent to sleep in or to do business, the money that you get from those houses, you're supposed to get part of it and pay to URA as income tax. So you only pay rental income tax if you have properties for rent.
Okay. Then how different is it? Is rental income tax from property tax?
Thank you very much. Property tax is paid to your divisions, your local governments, to allow you operate from their area. For people in business, they pay license. It is to allow them operate from the areas of the, for example, municipalities or Kampala Capital City Authority, they pay license to allow them operate from that area. The ones that have rentals pay property tax. It is to allow them have properties or buildings in that area from which they are getting income. Then the rental income tax is the one that comes to URA. If you've paid license, when you're declaring your income and expenditure, it goes in as an expense. For people that have rentals, The property rates that you pay are embedded in the document that you fill in as a return as your expenditure.
Okay.
So for us as URA, we always take what is left after you have spent. So all of the monies that you pay to any ministry of the government, anyone that you deal with, is taken as an expenditure. You first remove it, and then what is left is what we charge as income tax. So for rental income tax, that is for the people with rentals. After getting the money that you've collected in the year, the treatment is different from the individuals and the companies. If you're an individual for this financial year, individual taxpayer, this financial year, we are giving you the threshold.
Okay.
Let me give an example of a person who gets 1 million per month. We multiply that 1 million by 12, and we get 12 millions. From your 12 millions, we are supposed to first remove the threshold for rental.
Okay.
And I said it is 2.82. Okay. How do we get it? It is this 235,000 I told you about people in employment that we are giving them per month, that we multiply by 12. To get what happens for this one who is in annual income tax, because the other one is monthly. That is why we multiply by 12 to get the threshold for the whole year. And when you do that, you get 2.82. So from the 12 millions, we first deduct the 2.82. And what is left, we charge 12% as tax. So that is the treatment for rental income tax for an individual. The rate is little to cater for any expenses that they incur on their properties. You could be paying for security, for water. So that is why we charge you only 12%.
And how about a non-individual?
Yes. For companies, companies are given expenses which are capped at 50%.
Okay. Okay.
We assume that they spend up to 50%. So I advise people with companies and they have rentals. If you collect 1 million, make sure you only spend 50% of the 1 million. Because when you're filing that return, we shall only allow 50% expenditure. And what is left is charged tax at 30%. So that is the difference between individuals
and
companies. Then we also have withholding tax.
Okay, but Irene, before we get to withholding tax, sometimes it happens that I can get my TIN when I'm employed, and then tomorrow I probably I start to be self-employed. My source of income changes. So in that case, what do I do? How do I go about that?
Thank you, Priska. We tell people to always amend their tax profile or update their tax profiles. If today you're in employment and tomorrow you start a business, amend your profile by applying to add a new tax type or to change a tax type. I could still be in employment, I'm still working with URA, then I also get a business. It means I'll just amend my profile, my tax profile, and add business on it. That means I will start from that time to file returns for the business. If I have a business and I maybe add on rentals, again I will just amend my profile. On addition to the employment, the business, I will then add on rental income. So that I pay money for the business and the rental, and I'm also charged the pay by my employer.
That's
so that means that person will be filing a return at the end of the year showing the incomes she's getting from employment, the business and the rentals.
And then what if someone completely doesn't have a job, or they've been employed and they lose their job and they don't have a source of income anymore?
Thank you. If you don't have any more source of income, you're supposed to come to URA and apply for deactivation of the TIN. So that it stops working, or I can easily say we pause it until the time when you come back into business or into employment, and then you can apply for reactivation. So it is the same thing we advise business. If you realize you're out of business, come to URA, tell them I'm out of business, I have come to close this team. We shall close it, and then when you come back into business, you come for reactivation. Because if you leave it active, we shall assume that you're out there working, yet you're not working.
Okay, that's very clear.
Then the other tax that I want to talk about is withholding tax. Withholding tax is your income tax that is taken in advance.
Okay.
It is taken before the time when you're supposed to pay it. One of the reasons for introducing withholding tax is because there are many people who are transacting, but when we get to a point of showing us what they are doing, they are not anywhere to be found.
Okay.
For example, we have importers. People bring in things from outside into the country for sale. But when you ask for their income tax, it is nowhere to be found. When you ask them to file returns, they are nowhere to be found.
They're always
They are
under
not
that
traceable.
threshold.
Yes. No, sometimes they are not even traceable.
Okay.
That is why we withhold some money from them, so that even if that person does not appear anywhere, we've already gotten some money from them. But my advice to all of you is to file your return so that that withholding tax comes back to you.
Okay.
In our next episode, when we are looking at return filing, we shall see how the withholding tax comes back to this business person. Whenever someone says they've withheld tax from you, for example, you have made a supply. When you make a supply, the withholding tax deducted is 6%.
Yes.
Whenever someone withholds money from you, ask for a tax credit certificate. It is one that will clearly show you the amount of the supply that you made, how much money was deducted from you and paid to URA, and then the balance that you received. Because that declaration will be needed when you're filing your income tax return. It is supposed to reduce the amount of tax that you're going to pay at the end. If within the year someone withheld 500,000 from you, but at the end of the year you show us that you're supposed to pay 1 million, this withholding tax should reduce the amount of tax that you're going to pay at the end. It means the 1 million is going to be reduced by this 500,000 that was withheld, and then you pay the balance of 500,000. That is how withholding tax works. Many people say that you're charging us so many taxes. You're asking for withholding tax, you're asking for income tax, you're asking for pay as you earn. So have you understood, my dear?
Yes, I have.
If you're in business and have asked for any withholding tax, it should come back to you at the end when you're filing your income tax return. Then the pay as you earn. Are you the one who is paying, the employer?
No, it's the employee.
It is the employee. You're just helping us to bring it to URA, but you're not the one who has paid that money. You've deducted it from your employees.
It's very, very clear.
Then the other one that we have is excise duty or local excise duty. That tax is charged on items that are excisable. They are usually items whose consumption the government is trying to control.
Regulate.
Yes. Such items at times are harmful to human beings. I'll give an example of cigarettes.
Alcohol.
Yes, alcohol. We charge excise duty on them to control consumption. And when excise duty is a form of indirect tax, so we charge it on the manufacturers, and then the manufacturer will put it back to the consumer because it will increase the price of that item.
Cost of production.
So that is the excise duty. It is only charged when you're dealing in excisable items.
And are those the same products that have to have the digital stamps?
Yes. On such products, the manufacturers are supposed to put stamps on every product. So if you find an excisable item on the market without a stamp, we advise you to inform URA. Then the other tax type that I want to talk about is value-added tax.
Okay.
I have completed income tax.
So now we're going to another tax head.
Yes, that is the value-added tax. The value-added tax is a multi-stage tax. It is an indirect tax. and it is
Irene,
a tax on
you said
consumption.
multi-stage tax. What does that mean exactly? Like, just break it down.
It only comes in when there is value addition on an item. Whenever there is a value addition, there is VAT that is charged there. For example, if you're dealing maize, you're a farmer of maize. At the point of selling that maize, we cannot charge you any value added tax because no value addition has been put on the maize. You're just getting it from your farm. But the moment you dry it and process it into flour, that is when value addition comes in. So on the point of selling the flour, you're supposed to charge value added tax.
Okay.
That is
so with every improvement. The improvement might not be in changing the value of the item, but by moving it from one place to another, you're adding value to that item. You bring it closer to
by bringing it closer to the consumers, you're adding value to the item. So that value added tax will be charged on that item until when it is consumed by someone.
Okay.
So it is a tax that is paid by the final consumer. In our next episode, we shall look at how to calculate that value added tax, and then the business people will be able to appreciate why we are saying that it is paid by the final consumer, because many of them always ask us in the trainings that you're charging us value added tax, but they will appreciate that that tax is not paid by them. It is paid by this person who comes to buy the item and takes it for consumption. If you buy it and also sell it to another person, you pass on the burden to that person who has bought it.
And what's the rate for VAT?
So with value added tax, we have different supplies.
Okay.
For VAT, we talk about supplies. We have the taxable supplies and the exempt supplies.
Okay.
Not every item that is on sale or every service out there is charged VAT.
Okay.
And then we also look at how much you're making as your sales. I talked about the small business taxpayers, the ones from 10 to 150 millions. They are not supposed to be registered for value added tax. No, payment for value added tax is done by everyone. All of us are not exempted from paying value added tax. But when we are looking at it here, we are talking about the ones who collect it on behalf of URA.
Okay.
That is why I've told you, business per se, we are charging them for VAT, but we are just telling them to collect it for us.
Okay.
Not them paying it. They are collecting it on behalf of URA. So when your business goes beyond the 150 millions, it becomes mandatory for you to collect the value added tax. Okay. You're not the one who is paying it, you're just collecting it on behalf of URA. So we have supplies. If you're dealing in exempt supplies,
and also what are some of those exempt supplies?
If you're dealing in exempt supplies, even if the amount of money you make in a year goes beyond 150 millions, you don't register for value added tax. Those items are found in the second schedule of the Value Added Tax Act, the VAT Act. I'll give an example of education services. If you have a school, even if you make 300 millions in a year, you do not register for value added tax because that is an exempt supply. Okay. If you deal in...
So even if I'm in pharmacies, hospitals,
if you have a hospital, it is an exempt supply. So that service of offering the medical services is exempt. Just imagine if we are charging VAT on hospitals, then you go there and you're sick, you would have to pay so much to get the services. That is why we don't charge value added tax on the medical services. So those are some of the examples of exempt supplies. That is why we tell people to make research before they engage in any business. You need to know this item that I want to sell or this service that I want to supply, how is it treated in terms of value added tax? Is it exempt? Is it taxable? So that when you get to our threshold of 150 millions, you're supposed to register for value added tax. But if you're dealing in an exempt supply, even if you go up to 700 millions, you can never register for value added tax. Then we also have the taxable supplies. Among the taxable supplies, we have the zero rated supplies.
Zero rated supplies. Zero rated, that sounds very similar to exempt. Like, what's the difference?
The difference, if you're dealing in zero rated supplies, we assume you're charging tax but at zero.
Okay.
It was put up to promote the people who are dealing in those items. Those are areas that the government wants to promote.
Okay. Okay.
So that if you're dealing in them, you can be able to claim your input tax. Because if you're dealing in a zero-rated supply, you're supposed to register for value-added tax when you reach the threshold.
Okay.
So when you register for it, it means you're going to be filing returns every month for value-added tax, charging zero tax, but you'll be able to claim all of your input tax.
Okay, so what is that input tax?
For example, I'll give an example of an exporter, because exports are among the zero-rated services or items. If you're dealing in exports, if you're dealing in drugs that are produced in Uganda, those ones are zero-rated. It means when you're exporting, you're not charging any VAT. So your item will not be so expensive. But you're paying VAT, for example, on water. When you pay national water, there is VAT that is charged. When you pay electricity, there is VAT that is charged. If you rent a commercial property, when you're paying that rent, there is VAT that is charged. So this zero-rated person or taxpayer, the one that is dealing in zero-rated supplies, will be able to claim all of the input tax on those expenses I've talked about. But they are not charging. Yes. Whereas the other one who is dealing in exempt supplies pays VAT but cannot claim it because they are not registered for value-added tax. So this zero rate is on items that the government wants to promote.
So like farming, like if I'm in an agriculture,
is exempt.
It's exempt.
Then I have an okay, I will go to the other one. The other taxable item or supply is the standard rated supply. The zero rated items are found in the third schedule of the VAT Act. Then we have the standard rated supply, which is the second taxable item. I talked about the ones that are taxable and the ones that are not taxable. The one which is not taxable is called the exempt supply. The ones which are taxable, we have two. The zero-rated supplies or items and the standard-rated items. If you're dealing in a standard-rated supply, then the rate is 18% in Uganda. It means on every item that you sell out, you're supposed to add 18%, which comes to URA. If you're to sell a marker at 500 shillings after its production, you're supposed to add an 18%, which is 90 shillings. So that marker will be sold at 590 shillings. So that 90 is what you bring to URA, and then the 500 is your money. So all of the items which are not in the second schedule and are not in the third schedule automatically become standard rated items.
Okay, that's very elaborate. Makes sense, because that extra 18%, it's really for your...
Yes.
Okay. Is there another tax that taxpayers should be mindful of?
No, I've exhausted the taxes that we collect in domestic taxes, apart from gaming and pool betting tax. So we have not talked about. That is obvious, the tax that is collected by those ones that engage in gaming and pool betting. For example, the casinos, where you go and play games for money. The people that go for pool betting, there is a tax that we collect, and those ones file returns every week.
Every week?
They are supposed to file a return every week. And then when the month ends, whenever a week ends, we give them up to Wednesday to give us the return. It does not mean that when we say Wednesday, you're supposed to file on Wednesday. You can file it on Monday or Tuesday. You don't have to
always wait for
the deadline. So that people who are engaging in pool betting are supposed to submit returns every week because of the nature of their transactions. And then when the month ends, they aggregate everything they've been giving us in the weekly returns, and then they will submit it in the monthly return.
Okay, so for gaming and pool betting, they file every week. Then for VAT, it's monthly.
Every month.
And then for return filing, for return income, that's yearly. Income tax
is
in general.
Okay. We shall elaborate more about the returns in our next engagement. Okay. But to be brief about the weekly returns, I've said they are submitted every Wednesday. Every time a week ends, we give them up to Wednesday to submit it. Then the monthly returns, we have withholding tax return, we have the VAT return, then the one for pay as you earn. Those ones are submitted whenever a month ends. We give them 15 days to submit the return.
Yes.
It does not mean that wait for the 15th day to submit the return, but we give them the 15 days for them to arrange their paperwork and submit the return. And those days are the same for payment of the taxes from the returns. So if we give you 15 days to submit a return for pay as you earn, it is the same time for you to submit the tax that you have charged from your employees. Then the annual return, we give you 6 months after the end of the financial year to submit that annual return. We shall elaborate more about these returns because we have provisional and final, but that will be in the next engagement.
Okay. Thank you very much, Irene. That has been very informative. Just before we close up, just share with us some of your parting shots and we'll move on.
Some of my
parting remarks, like as we wind up.
Yeah. I just want to thank our taxpayers for listening in. We promise to continue assisting you whenever you need help to do with taxes. We have different contacts or different offices throughout the country where you can find our URA staff to assist you, because we've been very brief. We've not been very elaborative about these tax types, but you can get more information on our website, which is www.ua.go.ug. Then you can go to any of our service centers across the country. Then you can also contact us on 0800 117 000. You can also contact us on 0800 217 000. Then if you have any challenge, you can send us your email or any information on services@ua.go.ug and our team will respond to you. We also have a WhatsApp number, which is 0772 140000. The contacts I've given you, the WhatsApp number, our website, all of them are available for you 24/7 throughout the week. Thank you very much.
Okay, thank you, Irene. But while you were sharing your parting shots, we got some questions coming in. Joseph Suranga asks, is VAT applicable to microfinance institutions?
Yes, they are supposed to also charge VAT.
Oh, okay. Then someone called Rafa is asking, what are some of the limitations of a taxman while collecting taxes? That's a bit vague, but the limitation of a taxman while collecting tax, I think it's still on.
I think that person is asking about the rights of a taxpayer when we come to collect taxes from them. I said we are supposed to treat them with respect. So if an officer comes to you to collect taxes, they are supposed to treat you with courtesy and respect. They are supposed to explain to you why they've come, why they are giving you whatever amount of tax they assess, and it is your right to come and object and say this amount of money that you've said is a lot, I cannot pay it, then you give your grounds. But that is only possible if you keep records.
Okay. Thank you, Irene. And for Rafa, in case you missed the start of this webinar, you can rewatch it. It's going to be available on our YouTube channel. So do rewatch it. At all our taxpayers, thank you so much for always being a great audience. We hope that you'll join us in the next episode that will be due next week, same time. We shall be talking about return filing once again. So thank you for being a good audience. Bye.
Wait, Abu, tunamaliriza. And what are you doing throwing papers all over the place?
I'm looking for an invoice for a sound system and cables that I received yesterday, but I can't find it.
You know there is a way of keeping all this in one place and available to you as and when you need it.
I really wish there was one, because the way these invoices grow legs and disappear.
I believe this is what you're looking for.
Now how did it get there?
Tabo! Do you know that with EFRIS, you can stay on track of all your business transactions and improve on your record keeping?
How so?
Kati tuli ku computer with EFRIS. I just search using the fiscal document number and I retrieve the records I'm looking for. Bookkeeping becomes simple after that.
Kapo, awesome, yeah.
I began using URS Kakasa Solutions and now I'm in charge of my business. And you can as well.
Kakasa, be sure you are in charge of your business.
Uganda Revenue Authority.